And to your point, Alonzo, too, yeah, I mean, that's a perfect example of, initial kind of conversation. Oftentimes people, have a negative connotation of disability insurance. They think, nothing's going to happen to me, or like I'm in pretty good health. But it really is, outside of, how they take care of themselves, right? Because there are those freak accidents that happen, or just things that are, degenerative. Sometimes they don't think about, or, an old injury pops its head up again and just kind of really causes more turmoil. That's where, disability insurance comes into play, and really kind of looking at it or viewing it as more so of an asset protection, because really what it does is it protects their income, right? So if they're unable to collect that paycheck, or, have that income coming in, how are they going to take care of all the things that they're responsible for, right? Their house, their car, their family, all those things that they rely on that paycheck or that income to do for them. So, really kind of viewing it as more so of an asset protection plan, or, thing to have in place versus just disability insurance, right? I think it oftentimes is just the power of words sometimes really kind of sways those clients into thinking some different things with it.
I agree.
So we'll go through just this presentation. It's going to talk about our dynamic foundation product. This is what the DI product we have in place right now for New York. We do have a new plan design or new product out. It's called our Cornerstone. That is available in majority of the states. I believe there's 8 of them right now that we're working on getting filed and approved. New York is one of those states. But if you do business outside of New York, we can definitely touch base on our Cornerstone product. There are some key differences between the two, but as far as the bones of it, very similar from the two of them. And please, if you guys have any questions, definitely interject, let me know, and then hopefully we can kind of go through this quickly, and then maybe still have some time to kind of touch on some illustrations or anything like that as well too. So this is, a little outdated, like I said. So state approvals in 50 states. Again, Cornerstone has taken over in about 40. I think, like I said, there's 8 states that we're waiting on. New York is one of them. South Carolina, Florida, Montana, Wyoming, both the Dakotas, and California. But if you do any business outside of New York, not in those states, again, Cornerstone would be the product for you. This is just kind of a brief snapshot, just letting you, talking about we've been issuing DI products since 1966, so we've definitely have been around in the game a little bit, and obviously, kind of gaining steam on some of those bigger names that I think a lot of you maybe are used to as well. So with our foundation products, we do have a non-cancelable and guaranteed renewable plan. We have the guaranteed renewable, and then we also have the business overhead or BOE expense. Now, the BOE is still going to be on our foundation product right now, even in those Cornerstone states. That is something that, potentially could transition at a future date, but as of right now, it'll still follow this foundation plan design. Just a brief snapshot of our benefit and elimination periods. Are you guys familiar with the terminology of benefit period and elimination period?
Yes.
Okay. So one thing that I will highlight here on our foundation product, we do have it to age 70. That is something that isn't available in our Cornerstone. So definitely something that makes it a unique selling point to have. So definitions of total disability, we do have what they call true ONOC. So what this is that your own occupation coverage for the length of the benefit period. So what this means is that if you're unable to do your own occupation, you will be paid, obviously if it's a legitimate claim, be paid on that, but still be able to work in another occupation. So if you have a doctor, let's say, that is unable to practice medicine, but they're able to teach, they would be able to collect their disability benefit from their policy as well as collect that paycheck, and neither one would cancel each other out, injure each other. The second one here, the own occupation and not working. So what this means is that they're not working in their own occupation and not working in any occupation during the benefit period, excuse me. So unlike the first option there, they wouldn't be able to have another form of employment outside of what their own would be and still collect that benefit. And then the last one here is 5-year ONOC and not working thereafter. So this, for the first 5 years, it follows the first example. So unable to work in their own occupation, but able to have or be employed in some other capacity. After that 5-year time frame, they wouldn't be able to work in any occupation after that. So there's some state variations here with California and Florida that you see here. So the guarantee renewable policy has any occupation and not working definition for the length of the benefit period. And that's for the occupation classes A, B, and M only. And then in Florida, it does have a 12-month ONOC and then not working for the length of the benefit period. So just some state variations there. So just a breakdown of our policy provisions. So in our non-cancelable and guarantee renewable, those are our occupation classes. So you're looking at 6A to 2A. This is our non-medical OCS. 6M to 2M, that's within our medical occupations. Our guarantee renewable follows the same there, but it also includes the A and B non-medical classes. So this is more so like kind of like your blue collar workers or occupations. And then 6M to 2M, and then M as well there for our medical too. And all policies are conditionally renewable for life. These are just our basic policy provisions. So these are built into the policy. They're subject to any state availability and variation. So depending on the state, there are some state variations. I would say most of the ones with foundation, you'll see some in New York, you'll see some in Florida, in California. But as we transition to Cornerstone, we did file through the compact, which basically kind of eliminated a lot of the state variations that we've had. So as we make that transition over, some of the ones that you'll see on the foundation aren't ones that transcribed over. But those are our successive periods of total disability, our presumptive total disability, surgical transplant, cosmetic surgery, and rehabilitation. So treatment of non-disabling injuries. So these, again, are also basic policy provisions, but the ones in the red that you'll see here are unique to the industry and unique to Ameritas. So these are only things that Ameritas offers. No other carrier has anything that that speaks to this. We'll get into these a little bit more as well too. The waiver of premium, the good health benefit, a survivor benefit, and the COBRA premium. Okay, so I'll touch on it here. So what this means, so the treatment of non-disabling injuries. So if something were to happen and your client needed a treatment prescribed by a physician to an injury or repair to their natural teeth, we would cover or reimburse them up to either the lesser of 50% of the benefit or up to $3,000. So whatever the lesser of that would be. And again, that would just be to help offset the cost of that injury. So if they fell, broke their arm, needed x-rays and a cast, they would be able to, file a claim through that and get, reimbursed to help offset the cost for that treatment. The good health benefit. So what this means is that for every consecutive year, the policy is in good standing, in force, the premiums are paid, we will reduce the elimination period by 2 days. So if the client has had the policy in force for 10 years, something were to happen, they needed to, go through the claim process or file, their elimination period would be reduced by 20 days. So that 90-day elimination period would now be shortened to 70 days. And then the COBRA premium, what this means is that if the insured were paying COBRA premiums or for their health insurance were to become unemployed due to a disabling event, we would help offset the cost to continue that premium payment for the COBRA premiums up to $1,000. This could be either for a single or individual plan or even a family plan for up to 18 months. So they can continue to have that health coverage there as well. Any questions on any of these?
No, you good.
Yeah, you had mentioned the COBRA premium. So obviously that's workplace policies.
No, so that's built into every policy. So it doesn't have to be like a workplace you're paid or anything like that. So that's an individual as well too. So again, that's in all of our coverages that we offer.
Okay, how would I explain that to a client?
I mean, I would explain it just like that. So basically, you know, they're paying COBRA through their employer or with their employer. A disabling event happened, and because of that, they lost their job. That would mean that they would lose their COBRA coverage as well too, because oftentimes it's through the employer. It helps help continue that coverage for that 18-month time frame, and hopefully within that time frame, they're able to either recover fully and find, you know, another job that allows them to have that health coverage, or you know, they go total disabled and, you know, their benefits change because of that and they have other things available to them.
Okay. Thank you.
Yeah. Some additional benefit riders and the enhanced residual disability, as well as the basic residual, the social insurance substitute rider, the cost of living adjustment at 6% compound, and the same thing but at a 3% simple, the automatic increase, the future increase option, the catastrophic disability, and the student loan repayment rider. And again, some of these are subject to state availability and variations, and the residual is a built-in feature for California, and it's called the partial incentive residual. Let's touch on some of those, right? So the enhanced and basic residual riders. So either the enhanced or basic residual is required for medical occupation classes 6M to 3M. The basic residual is required for medical occupation class 2M. And for California, either the enhanced or basic partial is required for all non-can and guaranteed renewable policies in California. And the premium for either benefit is included in the base premium versus it being listed as a separate rider on the illustration. So what this means is that if there's a 15% loss of prior monthly earnings and the inability to perform one or more of the material and substantial duties of their occupation, or the inability to engage in their occupation for 80% of the time, as was usual prior to the start of the disability, this benefit would pay an additional benefit on top of what they're getting from their base policy. Now, what this means basically is that they're unable to work full time, but they're still working in some capacity. So they would be able to collect that paycheck as well as collect on having this rider on the policy. So it does not require any days of total disability. A total benefit paid with 75% of loss of their earnings as a result of the disability would be considered a total disability. So the total benefit would be paid. Cash or accrual accounting method. The enhanced residual, so there's a 50% minimum benefit for the first 6 months, and the basic residual has a 50% maximum benefit. So what this is basically for the first 6 months, the minimum that they'll pay for the enhanced residual is at 50% minimum. And then the basic residual, the 50% would be max of the actual base benefit. Higher monthly earnings, so an average monthly earning for at least 12 or 24 months, whichever is higher. It's indexed, compounded, and it's CPIU linked, so the Consumer Price Index linked. Makes up, what this comes into. There is a built-in feature with the enhanced residual. It's called the recovery benefit. This is payable in the month immediately following the period for which the monthly disability benefits have been paid. The insured returns to his or her own occupation, and maintains that minimum loss of 15%. And a demonstrable relationship exists between the loss of monthly earning and the previous disability. This will be payable up to the maximum benefit period. The partial disability benefit. So this is built into our guarantee renewable policy only. The ability to do
I'm
one
sorry,
or more,
Tanner,
but not
did I
all the
miss
main. Yep.
the maximum benefit period? Is that to what is that? Is that till age 67 is the maximum available?
The maximum available for the foundation product is to age 70. So
Okay.
when it speaks to the maximum benefit period, it would follow whatever is on the policy, whatever. So if the policy was to age 70 benefit period, it would follow that.
Okay, thank you.
Mm-hmm. So for the partial disability, again, it's built into the guarantee renewable policy. So if there is ability to do one or more, but not all the main duties of the occupation, or ability to perform all their main duties or less of the time normally required, the 50% maximum monthly benefit is payable for a maximum of 12 months. Now, if either the enhanced or basic residual is selected, the partial disability benefit is not payable. So again, this is something that's just built into the guarantee renewable policies, but if there is a residual on the policy itself, this would be null and void. So a cost of living adjustment, or a COLA rider, as some people like to call it, it is linked to the CPIU. It's up to 6% compounded. The right to purchase increase, and those increases, and there's a catch-up feature. So this helps with periods from low to high inflation. The 3% simple, so this just provides a 3% simple increase in monthly benefit after the first 12 months of disability. It is a flat 3% increase, even if the CPIU is below the 3%. There is no catch-up feature. So where the other one had a catch-up feature from low to high inflation, this one, again, is just a flat 3% increase. Our social insurance substitute rider. So this pays an additional disability benefit each month if the insured is totally disabled and receiving limited or no social insurance benefits. Now, the definition of this rider follows that of the base policy as far as the definition of disability. A couple things to know about this one. So as it said there, if they're receiving limited or no social insurance benefits, if they were, they would offset each other. So if they had $3,000 on the policy for social insurance substitute rider, and they were receiving $1,000 from other governmental aid, social insurance, this would be reduced by that 1,000. So they would still be getting paid the same amount total across both entities, but the policy itself would be reduced by anything that they're getting outside of it. With this rider as well too, this is a good way to help offset some of the costs of the policy. So what this does is that instead of offering let's say $6,000 in just base benefit, it would split that up to be $3,000 for the base or $3,000 for the SIS rider, and help reduce that overall premium for that. So if you had a cost-conscious client, someone that had a price point that they needed to stay under, or even some blue-collar workers, this is a great way to again give them a great benefit for that asset protection, but also keep in mind maybe what their price point might be for something like this. So this is just kind of talking about that dollar for dollar offset there. If they're getting anything from a Social Security or social insurance outside the policy itself from any governmental entities or anything like that.
Would that also coincide with other DI policies?
No, so this wouldn't be impacted by anything other DI policies. So this is only impacted by any like social insurance or anything government related like that.
Thank you.
Yep. Now, the only thing to keep in mind as far as other DI policies are, we do have, and most carriers obviously have this as well too, what are our max issue and participation limits. So we do need to take into account any other coverage that they have currently that will impact, what our offer would be, just to ensure that they're not overinsured. But as far as this, specific rider goes, this isn't impacted by that, if that makes sense.
So, but if they don't receive Social Security, they still continue to receive the full benefit, correct? If they get denied for Social Security,
correct.
Because I have a friend that's been getting denied for 2 years. So in that case, they would continue to receive the full benefit, but only if they approve for Social Security, then it gets reduced, correct?
Correct. Yeah. So, like you said, for that instance, if they are not receiving it, then it won't be impacted. But if they get approved and are receiving it, then that's when it will get reduced by whatever they're receiving from that.
Question on that, actually, then, Tanner. I have a situation where I have a client who was declined SSDI for about 2.5, 3 years. And then he was finally approved and they gave it to him retroactively. Would that retroactive benefit affect the DI policy at all?
No, I mean, I've never come across that, but I wouldn't think that would be something that we would retroactively make impact for the client, if that makes sense. So I can double check on that, but I don't believe that would do anything. It would only be once they, that actually is active and starts current, then that would impact this benefit.
Thank you.
For automatic increase rider, issue ages for this are 18 to 55. There's no cost to have this on the policy at issue. This is a 4% simple annual increase for the first 5 years of the policy. There's no financial or medical evidence required to exercise this. An additional 5-year benefit option available is only with financial underwriting. So if they wanted to do anything additional outside that first 5 years, they could still do that. It would require financial underwriting to continue that on. The minimum base benefit for this is $1,000. And then one refusal will forfeit any remaining options during that 5-year period. And also will forfeit the insurer's right to reapply for a new 5-year option period. So let's say, policy year 2, they refuse the increase, say, I don't want it anymore, I like to take it off. We would do so, and then basically, again, forfeit any remaining options, years 2 to 5, and anything after that 5-year as well. Thanks, Patrick. And with this one, again, no cost to have it. So the only cost associated with it is when it actually increases the benefit each year. That will just be, built into the premium that they're paying. This is a great way a great rider to have on the policy to, again, automatically just increase the benefit available to them. So, if you have an insured or a client, maybe that's just starting off their career, or, somebody that will continue to kind of advance and continue to increase their wages as they continue their career, this is a great thing to have on the policy, again, because it's going to be automatic increase for the first 5 years with no financial or medical evidence required to do that. So future increase option, or SIO rider, this is available up to issue age 50. No medical evidence of insurability required when exercising increases. It's only financial, required there. Age 45, so this is after policy issue. The client may, on any one policy anniversary, exercise the full, thereafter 50% of the base benefit each policy anniversary up to age 55. Now, there are off anniversary options available. The criteria for this is that if they have a salary increase of at least 30%, or if they have an involuntary loss of group LTD coverage, we would consider that a significant financial event and be able to look at an off anniversary increase. Now, for this one, though, they will be able to exercise or apply to exercise for an increase every policy year. Now, the available amount at issue, it would be the max is 3 times the base benefit, and it's not to exceed our maximum issue and participation limits for their occupation. And this does guarantee the rate structure, occupation, class, and language of the original policy. The insured pays at attained age rates. So again, there's a cost associated to have this on the policy, but as they increase, it still locks in that same rate, their occupation class, the language of the original policy. If they have any discounts as well too, those discounts would also translate into this increase as well. A catastrophic or CAT rider, this is not available in California. In Texas, CAT benefits are payable for total and permanent presumptive disability. We don't have to worry about that. Texas is a cornerstone state now as well. But what this does is that any severe cognitive impairment or inability to perform 2 of 6 activities of daily living without standby assistance, so that's those listed there, this would pay an additional benefit on top of what they would be getting from their base coverage as well. So, I've talked to agents that every illustration they run, they have this on it. I've talked to other ones that they never put it on an illustration. So it really kind of all just depends on how you view it or how you want to sell it. But to me, I think this is a very beneficial thing to have, because again, if they have the inability to do 2 of the 6 of these, this would be paying an additional benefit to the insured on top of what they might be already getting from the base policy itself. So oftentimes, we call this like the long-term care kind of rider, because this, gives them that benefit to help make any adjustments on their home or vehicles or anything like that to help treat or care for them as they're trying to deal with this disabling event. Now, the maximum issue is 100% replacement of the insured's gross income, net of any business expenses with the combination of their base benefit, their SIS, and CAT benefits, and again, any other DI coverage in force. So between all that together, it can't exceed what their gross income is coming in monthly. $3 of CAT benefit for every $1 of base SIS benefit, not to exceed $10,000. So $10,000 is the max amount for the CAT rider. It does have elimination and benefit period flexibility, so it doesn't have to follow the base elimination period and benefit period. So there is some flexibility there with this as well. This is just kind of a breakdown of the different variations based on the income here as far as what they would qualify for base and CAT. Our student loan repayment rider is available for issue ages 18 to 50. Designed to reimburse student loan payments during a period of disability. It can be added, subject to underwriting approval, to existing Ameritas Dynamic Foundation policies. It does require a minimum of $1,000 base monthly benefit. The maximum number of student loan repayment riders available to put on the policy is 3. The minimum monthly benefit for that would be 100, and then the maximum monthly benefit is 2,500, all riders combined, so $2,500 total. Does have coverage periods of 5 to 15 years. Must be less than or equal to the base benefit period. Elimination period is 90 or 180 days, and again must be equal or greater than the base elimination period. If a residual or partial benefit is paid under the policy, the student loan repayment rider will reimburse up to 50% of the monthly loan payment. So exclusions and limitations here. So incarceration, any war or active war, declared or undeclared, suspension of any professional licenses, undisclosed pre-existing conditions, 12-month foreign residency limit, and intentional self-inflicted injury as well. So our mental nervous disorders and substance abuse limitations. This is fully underwritten individual DI. So for our non-CAM policies, our non-medical occupation classes 6A to 4A, there's a 5-year limitation for the policy. For any non-medical occupations, so our 3A to 2A, there's a 2-year limitation. For our medical occupations 6M and 5M only, there's a 5-year limitation of the policy. It's not available in California, Texas, and Vermont, so California or on our guarantee renewable policies. And then 4M to 2M is a 2-year limitation. And then all guarantee renewables will have a 2-year limitation for the life of the policy. So some discounts to kind of hit on here. So multi-life discounts, 15 to 20% from sex distinct rates. So this would be anything that's 3 or more lives. Medical resident or intern discount, so 6M to 4Ms, with 20% discount, 20%. Not available for residents who are part of an approved GSI residency program. So we do have established graduate medical education programs at a multitude of different universities. If there was a resident within one of those programs, they would be unable to have the resident discount. You'd still be able to provide them a policy, but they wouldn't be able to get the discount due to that previously established relationship plan. Multi-life guaranteed standard issue, so our GSI, anywhere from 15 to 30% from unisex rates. Association discounts, that's 15%. So this would be, like your American Bar Association, those type of things. And this double annual premium discount, that isn't something that we are discontinuing, so it isn't anything that's currently active at this time. Our preferred occupation premium, so this is a reduced premium available for all 6A, 5A, and 4A non-medical occupations. It's a 5% reduction. And it's also available for specific 6M medical occupations. Those are all listed here. That's a 10% reduction, so a 10% discount there. This does require the use of our eApply or Easy app, which is our tele-underwriting option. So as you are going through, or if you go through the application process, and this is something that you want or are eligible for, You just want to make sure that you use a tele underwriting. And if we, ever get to that point, you can definitely reach out to me. We can walk through it and make sure that everything is squared away so the client does receive that. It's available on our non-can and guaranteed renewable policies. Issue ages are 18 to 60. Again, as I mentioned, the use of the easy application applies to all level and step rate plans. That's another thing we're kind of getting away from, is that step rated premiums. All riders across all benefit periods, elimination periods, and definitions of total disability. This can be combined with other discounts like multi-life association. Business owner upgrade. So this is available for business owners with established office space and or employees, full or part-time, and at least 20% ownership of a stable, financial, successful business for the last 2 years. And again, that would be supported by any appropriate financial documentation. What this does is that it provides an upgrade available to them as far as their occupation class. So if the original occupation class was a 4A to 2A or A on individual DI, it would be available for them. Or if the occupation class was a 4A, 3A, 2A on our business overhead expense. And then a 2-class upgrade, 3A, 2A or A, and then 3A, 2A on BOE. If their manual duties exceed 25%, the managerial duties endorsement may be required on the policy. There are some additional benefits for business owners as well. We do have a business owner income enhancer. This allows an increase of insurable income by an additional 20% to help business owners cover the loss of company perks. Those are the occupation classes there, 6A all the way to A, 6M, 5M, and 4M, medical specialties only. They do need to have a minimum of 20% ownership in a stable business for the last 2 years. A $2,000 maximum monthly benefit increase. It's subject to maximum increase in participation limits. So again, a great way if you have a business owner that you're looking to provide them coverage with, to have this on the policy, because it does give them that little bump of 20% to help offset or cover any cost of just being a business owner. Any questions on any of that stuff? I know it's kind of a lot of information at once there to retain. Do you guys have any, after seeing that, any questions?
I think you answered most of the stuff in between.
Okay.
Yeah, you went through it.
I was going to say too, and I know, Alonzo, you had a situation, but I wasn't sure, kind of after going through this, if popped any questions in your head of previous conversations that you've maybe had with clients that, you wanted more insight on, or just some more information.
Well, yeah, I have quite a few clients who I would be interested in the disability. One, unfortunately, we won't cover because he's in the entertainment industry and he's a freelancer. But I do have some that I can definitely consider running this by. My question, however, is the blue collar. What particular occupations are we open to?
It really kind of depends, but I would say, in the blue collar space, anything that has, any high risk or super manual work, we tend to stay away from. Pilots would be one, obviously high risk there. Some construction workers, depending on what their duties are. So it really kind of just depends on what their duties look like and what their day-to-day.
Okay. So I work with a lot of police and firefighters. So that'd probably be a no-go.
Yeah, so for police and even like security guards and anything like that, if they're carrying a firearm, it would be a no. But if they are strictly office work, then we would potentially be able to cover them. Same thing with firemen. Any firemen or EMTs, it would be a no just based on their job duties. But if they were a chief or somebody that, again, all kind of managerial or managing duties, then we would be able to consider them.
I have a question,
Thank you.
Tanner. This is Gilda. How are you? That
I'm doing
question.
good. How are you?
I'm good. I'm good. Hey, so with regards to you said police officers or anybody that carries a weapon. So the disability, what if it's something outside of work? It's not related. The disability is because of his unrelated work injury. Used to, I mean, because police officers in New York, right, they have great disability program. They get paid 100% of their salary if they're hurt at work. So a workers' comp would definitely cover them when it comes to disability programs that they already have through work. But what if it's off work sites? Would you still be able to sell that to people that do that kind of work if it's unrelated to their jobs?
Yeah, unfortunately, it's a no across the board if they have a weapon on them. Yeah, so they'd still, if that wasn't the case, right? If they didn't have a weapon, we would be able to consider them, and it would be, obviously, if there was an injury outside of work or anything like that, we'd still be able to cover them in the claim situation. But if they have a weapon on them or they carry a weapon, it would be a no. Unfortunately, we wouldn't be able to provide them coverage.
Gotcha. The reason why I'm asking is because other companies do have disability programs, but they don't cover them if they have workers' comp because they already know that they're going to get covered by their job or their state, with New York, for New York State. But anything outside of
Yeah.
work, they don't get covered for. So that's where their personal disability policy would kick in, if that makes any sense.
Yeah, and yeah, absolutely. And oftentimes with those state or governmental employees, they do have coverage in place, and that's one of the questions that we kind of ask.
Mhm.
Do you have any coverage in force currently, anything like that? We do for some of those individuals that are employed through governmental agencies, just because we do know that they do have some kind of benefits in place. Now, oftentimes it isn't described or written down as disability insurance, but it is something tied to their retirement or their PERS that they get.
Right.
So that is something that we keep in mind through the underwriting process, that assumption of that they're getting at least, a 40% or 60% based on if they're state or federal employees.
Yeah, New York State is 60%. And that's
Okay.
why we're,
Yep.
Under workers' comp, you're only disability, you're only allowed 60% of your income on disability. So if anybody buys a disability program, it can't be something for workers' comp. A disability program wouldn't cover them. Put it that way. So something like this,
Mm-hmm.
if an officer were to buy it and they would get hurt on the job, this is not something they would be able to collect on, because it just would be too much money, and they wouldn't able to get the money. And that's why I asked the question that I asked. But it's good to know, though.
Yeah, that's a great question. And it kind of brings up
Tanner,
another point I definitely wanted to share. Yeah.
what about state and federal employees that are civilian?
Yeah, and there's no,
I think it's the same.
just based on that information, there's no, qualms with them. Again, it would just be, we would obviously ask if they have any enforced disability insurance. And if not, still make the assumption that they're getting something from their employment, either a 60% or 40% if they're, either state or federally employed.
Yeah.
And Tanner, up here, and how about like registered nurses? Because I'm up here by Jacoby Medical Center,
Oh.
and I want to canvass the hospital. I know they have a lot of registered nurses there, so our product and registered nurses considered a blue collar occupation? Are they covered through Ameritas, registered RNs?
Yeah.
Yeah.
Yeah. So that's definitely a good block of business that we've seen, or we get a lot of those in. So yeah, that is something that we cover, and something that we have on the books.
And are we able to give them like a group discount? Say if I get 3 or more to sign up through one medical center, can we give them some type of discount, group discount?
Yeah. So as we would be looking at like a multi-life discount there if you get 3 or more at the same employer. And I would say too, if you guys are kind of actively working some businesses, or definitely hospital chains, anything like that, that are kind of bigger names, reach out to me and just provide me with the name of the business or the name of the hospital, and I can check our system to see if we already have one established. Oftentimes with some of the, like I said, bigger kind of names, we have a multi-life already established in our system that you can offer to your clients. It's not proprietary to a specific agent, excuse me.
Well, see if they have Jacoby Medical Center, because they literally down the street, 2-block walk from me, and I want to talk to the hospital administrator and see if I can set up a table there.
Hey, Charles, just so
Okay.
you know, the nurses love any disability programs because we sell a lot to them. But it's limited. We only offer like the five-year program, and this is a lot more attractive because it's long term, very long term.
Well, they get it. They see it. Yeah, they work in
Oh
the
no,
hospital.
for sure. I'm telling you, hospital nurses, they love disability programs. It's like hotcakes. So I go into hospitals quite a lot. So it's good to know
And
more
I would,
about disability. So how would the discount work,
yeah.
Tanner? How, like you say discount, what does that mean? Less how would that work in terms of the client? The discounts, like how
For
big
the
are they? How
multi-life,
small are
it
they?
would be, it'd be 15% for the multi-life.
So it'll be 15% less on their
Yeah, so correct.
payment.
So it would basically just be, yeah. So on the illustration, what you would see is that you would see everything kind of calculated, and it would say premium, original premium and premium before discount, and then it would take the 15% off of that and say like new premium, and it would that would be the total.
So I have another.
So
I'm sorry.
there's already they have is there a discount for non-tobacco? You know the percentage if they don't use tobacco?
No, so there isn't anything that's actively like here's your discount. It's just in the price. So if they're non-tobacco, it's already calculated out. If they are a tobacco user, that's already in the pricing point.
Okay.
That's good. Oh, Tanner, I had a question. It just came back to me. So I saw that you had 3,000. Is that the max benefit? So if you have a high income earner, somebody that's making 6 figures, right? 6 figures and up, would they base that on the person's income? Would that be a higher monthly rate for benefit? How does Ameritas calculate the benefit amount? If that makes any sense.
Yeah, so it's all
my question.
Yeah, so it's all based on their occupation and their salary, correct? So,
Okay.
if they're a top end like a 6A, 6M, 5M, 5A, one of our top classes, and they're making, like you said, 6 figures, they would be, their benefit amount allowed if they don't have anything else in force would match that, right? So our max issue and participation limits with no other coverage in force for those higher OC classes is 30,000. Now, what they could do obviously with that is that they could have $10,000 in base benefit and then $20,000 in their FIO.
Gotcha. So okay.
Again, that could eventually get them to that 30,000. So that's a way to save on the premium, because it's not all base. You're splitting it up between base and future increase option there. So that's kind of where it's at. Now, if there's other disability in force, either group or other individual coverage, that number changes because we have to calculate in what they already have. Oftentimes it's like 35%, but that's total between us and the other carrier. So it wouldn't be like a 30,000 for us. It would be 35,000 collectively between what they already have established and what we would be able to offer.
So I know that a lot of the nurses don't have long-term disability. The job offers short-term, they get maybe 2 weeks of sick pay, they get sick. So let's say somebody has surgery or has a fractured arm and they can't work for 6 months and there is no other disability plan in place, then they would get the full $10,000 based on their income, right? If they're making, let's say, 200 grand, because a lot of our nurses, they make a lot of money in New York. So you're looking at 6 figures and higher. So how would that, can you give us like an example how that would look like?
Like what they would qualify for if they were making 200,000.
Yeah, let's say they're making,
asking?
let's just make up a figure. Let's say $150,000 of income for a nurse. And let's say he or she gets hurt and breaks her arm, and obviously they can't work for maybe 6 months. They're out for 6 months. Let's just say 6 months or even a year. How would that look like for them in terms of what their payout would be if they had no other, they got hurt off the job, it's not work related, they're not getting workers' comp, New York State disability doesn't cover them for whatever reason. So this would be the only, if they had this would be the only policy they'd have in place. What would that look like?
Yeah, give me 1 second here. So let me pull this
I'm
up.
sorry, because Charles,
you're
see, you started this, Charles.
Well, we might have just uncovered a huge market.
Well, yeah, you have a lot of people in Jacoby.
That's a big opportunity, and we cover them because I don't think Mass Mutual. Matter of fact, I know Mass Mutual doesn't cover nurses.
My nephew works
nurses.
for Mass Mutual, and he actually bought disability from me, but through Combine. And this is this is a better product because the term is longer, and the money that you guys have is a lot more. Combine only offers 5,000. That's the max, and they'll only do 5 years. And people are paying a lot of money. Nurses pay a lot of money to buy these products. So I know it's something that's very interesting. They buy it because they really want it, and they make a lot of money. So they want to cover, they want to protect their income if they can't work. So
and they have the money to pay. They get
exactly, they're high income earners, and they care about protecting their money, their income. So yeah, that's why this is a great product for that particular industry.
And now we know we can give them a 15% discount if you get 3 from the same.
Oh yeah,
hospital.
you'll get a lot if you sit at Jacoby. You're gonna get a lot of business there. I'll sit with you, Charles. I'll go sit with you.
Yeah. We'll set a date.
Charles, this is Derek. Pump me in on that.
Yeah, we're literally 2 blocks away from Jacoby.
So look, at, let's just say somebody makes 150,000, right?
Mm-hmm.
All right, so they're
That's what he's pulling up now.
So 150. There we go.
Our rule of thumb is that they get like 60, 65, 67% of that in disability.
So EE pays, that's what they pay for the coverage, 5,005. Is that the annual premium, the 5,500?
No, that would be their total. So they're looking at here. So if they're making 150,000,
yeah,
what we could offer them would be 7,500 in their base.
Okay,
benefit.
That's great. That's
now this
definitely...
is if they have any max with other IDI and obviously any group. This would be in conjunction with that. So you're looking at 7,500 combined between what they already have established and what we would be able to offer.
Right.
Now again, with that, this doesn't include the future increase option or the automatic increase rider, right? This is just their base benefit. So 7,500 just out the door, just bare coverage right there. So you can continue to add to it by those increased riders. So again, as they continue their career, they have the ability to provide that increase to help cover their asset or their income as they continue their career growth.
And what are we looking at here in terms of how long? Is this up to the age of 70? What does this cover?
Yeah, correct. Yeah. So this showing you what they could qualify for as far as the benefit. This doesn't have any impact on the elimination period, benefit period. So this could be for any combination of, you know, benefit period, elimination period. Again, within reason, right? So, you know, that it does go off of their occupation. So here is our, you know, issuing participation limits based on their occupation. And again, this doesn't have any bearings on the benefit period or elimination period. So it could be as high or as low as you want it. This is just based on their occupation, what the max issue limits are and participation limits are.
What class would nurses be under? Occupational class, what would that be under?
Give me 1 second here.
And Tanner, can you send me this document you're looking at? What is this?
Yeah. This is just the agent guide. So our foundation agent guide.
Yeah, I would like that too, if you don't mind, Tanner. I mean, I guess Charles, you can send it out to
Yeah,
all
I'll
of us.
send it out.
Okay.
So here's this is also
Medical.
our occupation guide. So you can go, yeah. So they're medical. So you know you have our CRNAs there. You have registered nurses.
So they're
broken
3M.
down by, you know, what their duties are. Yeah, practical
3M,
nurse,
2M.
Nurse practitioner. So
Yeah.
it all kind of depends on, you know, again what their duties are. But one thing I will say, I know we're kind of over time here. One thing to keep in mind as well too, as you're talking to a lot of these professionals, is that oftentimes you might hear, I'm covered, you know, disability insurance through my employer. You know, I would ask them to review that with them, right? Because oftentimes it doesn't cover them all the way.
No,
one
it
thing that
doesn't.
they're not keeping in mind is that it is taxable. So it may seem that they're getting, you know, $6,000, but once Uncle Sam takes their cut of it, they're not getting that $6K, right? So it does leave some room for that gap protection, which individual policy comes into play there, as well as it's not, you know, really specific to their needs. It's really kind of just a one-size-fits-all approach to it. So really having that individual policy in place, again, allows them to bridge the gap between coverage to ensure that their income is being replaced or protected, but also giving them the ability to have those increased options, have the catastrophic rider on it, and those different things that we talked about today as well too. Won't be things that are offered in that group coverage through their employer.
Tanner, I have a question. You said that disability is taxable from like these coverages. This is taxable income.
If
the benefits should not be
employer
taxed.
paid,
because honestly, in New York, they don't charge taxes.
Paid,
You're saying if the
okay, gotcha.
If the company pays for it.
Yeah, because usually we don't pay taxes on disability money.
Yeah, no, it's only employer paid. Yep. Because again, so the whole point there would be that, is that again, I'm covered through my employer. Okay, great. And it may say like I'm covered up to $6,000. Well, that's not the case. If it's employer paid, Uncle Sam's going to take their cut of that. So that $6K after taxes is going to be reduced. So they're not being covered as much as they think they are, just with that you know, employment or employer paid coverage that they get through work.
Well, definitely something that nurses always buy from me. I sell this a lot, but not through Ameritas. But this is good to know because it's a better product. It's a much better product than and it's reasonably priced. What would that cost a person monthly if they had let's say a monthly payment? What would that look like for them?
I think we can do she can do we can do the we have to do another one just for the illustrations.
See, I'm a very hands-on person. I like to see it and then I can understand it. You know.
Yeah, which is fine, and that's a difficult question to answer because there's a lot of different factors that go into play of that. But I think Charles was right. I think, you know, if we did like an illustration
we
that we can actually go through and look at different variations.
We definitely need a follow up because
absolutely.
you see, we can keep going here. We can.
So I gotta. So so when you're doing an illustration, and normally, you know, like when you're plugging numbers in on the illustration, after you put in the person's numbers, blah, 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 it'll automatically give you what the premium will be, right? So that's
Yeah.
not something we figure out ourselves. It automatically gives that to
Right.
us, right? Generates it for us.
Yep.
Okay.
Mm-hmm.
Okay, got it. All right. Good to know.
Tanner, I have an opening on November 7th, the 21st or 28th. November 7th, election day. It's Tuesday. But because we want to have a follow-up to this, because there's still a lot of questions. You didn't really go into the illustration on the new system. And also you have mentioned associations, and there's a lot of stuff you brought up on the call that we can have a follow-up call. I know we're over time now. So I don't know what your schedule looks
November
like.
7th, November 7th, I'm booked. What was the other date you threw out?
The 21st or 28th
28th
of November. Mm-hmm.
Yeah, the 28th, I'm open. I only have a 2 o'clock on the 28th. So whatever time works best for you, definitely send me an invite there and we can get together that day.
All right, good. We'll do the follow-up on the 28th, go more into the illustrations, and by then I should have some leeway. At least I was spoke to the administrators of, I'm ready to go over there now. You got me fired
Outside
up.
of,
Yeah, there you go. Right.
Charles and
outside
Tanner,
of
don't forget the
nurses,
portability of these plans.
The what?
Oh.
outside of nurses, would this be available to like self-employed, like barbers and real estate agents?
Of course, why not?
Yeah.
Real estate agents, yes. Barbers, yes, as well. There are some caveats to that. Salons and things like that. But yeah, I mean, it is something that we insure, people that we insure. Correct. Yes.
And that booklet you had on the screen, that shows which occupations are insurable and not, correct?
Yeah.
Yep. Correct. Yeah.
Yeah,
So
definitely.
it'll
Yeah,
break
definitely
down
send that
occupations
to
and
us. Correct. Mm-hmm.
yeah.
I think those are the people that need it the most because they have nothing. If they're self-employed, their employer is
Mhm.
not providing anything for
Right.
them. So
Yep.
Do
they're
we
the
have any marketing material for self-employeds or specifically realtors?
We don't have anything specific to them like self-employed, but I can definitely provide Charles with some stuff, the agent guide and some other flyers. I think that would be useful as you guys are having these conversations.
Thank you.
Awesome,
Yep.
Tanner. We appreciate you. Thank you. Thank you so much.
Thanks,
for your
Yeah,
Tanner.
thank you guys for your time.
Yeah,
I
yeah.
appreciate it as well too.
Thank you.
If you guys need anything, definitely reach out to me and we'll touch base obviously again in November. But in the meantime, don't hesitate to reach out if you have anything.
Tanner, I have